Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
So a few things to say. Markets have been strong, as I mentioned, over this week, although this is a moving target. This one was cut off on April 1st. So Wednesday, we still have had reasonable volatility in markets as we've had at the president's speech in the evening of Wednesday, and markets did react negatively to that. But the strength of markets has been a bit of a surprise, reflecting some either the money on the sidelines wishing to move in with a sense of FOMO, but the underlying fortitude that has been there. And the chart on the right speaks about earnings and how earnings have been doing the heavy lifting, and that forecasts have been strong. Again, another backdrop to all of this has been AI, job cuts. We've heard a lot about quite significant job cuts, even kind of whole philosophical rethinking of how middle management works. I mean, it's been a big move. There's been a lot of news flow that has perhaps gone beneath the radar screen because of the conflict at the fore. We know that projected EPS has still been high, and that we actually have a pretty strong earnings forecast underneath. So that has been an underpinning for some of the equity market strength. In terms of another sign of equity market strength has been the ongoing buzz around big IPOs coming in the pipeline, whether it's SpaceX, Anthropic, OpenAI. We have a massive fundraising going on by all of these companies, particularly OpenAI, and we spoke about that last week in terms of some of the guarantees they're giving to their private equity backers. So massive fundraising going on that really dwarfs even what an IPO could raise. And then perhaps in another sign of the expansion and the risk appetite, just saw a sign about Franklin Templeton, a very established asset manager, agreeing to buy a crypto spin-off. So clearly there's a lot of digital assets kind of on the fringe there. And my last slide had been about the sell-off and the shape of the sell-off, that this really doesn't even register in terms of some of the other sell-offs that we've seen. Certainly we're starting at a higher peak. And this is the FTSE here we're looking at, but we could look at any in the index for the same thing. We know that there have been sell-offs in the past, but this is only the fifth largest of the decade. So very strong underpinning when it comes to equities. And I suppose just to close us out then, Christian, and I'll stop sharing at this stage in terms of the screen. Any kind of concluding thoughts on equity markets and your how you take this, maybe some of this dissonance? We've talked about the uncertainty, but yet markets remain very strong.
Yeah, you're right. And I love your charts and what you mentioned about earnings and AI and some of the tailwinds. But basically, earnings is doing the heavy lifting. I think that's absolutely a crucial point. And when you think about the expectations for earnings growth this year, they're extremely strong. Already at the start of the year, they were strong. They have been revised higher, right? So, and a lot of what is behind that is actually AI capex or AI related and technology driven. So in a ways, yes, it makes sense, and that's the reason why the market maybe hasn't panicked so much, saying, okay, the corporate sector and were robust coming into this. So far, you have not enough of reason to challenge that. Is something definitely to watch. I mean, you have earnings expectations of 17% year on year for full 2026 in the US, and they have gone up. As I said, normally they tend to drift lower. And I think maybe just to close, something I found interesting yesterday, speaking to the strength of the equity market, is yesterday we saw oil move significantly higher again, right? So retest the highs, basically was up 10% or so on the day. Equities were flat. Say 2 weeks ago or 3 weeks ago, we would have seen a day at least 2% down in equities. We had the initial sell-off, recovery into the close, which is particularly important considering that you have a long weekend, right? And we have been sort of become more accustomed to get headlines or market moving headlines during the weekends. So I found that quite interesting, and that predisposition perhaps of market participants to try to buy the dip, and as you described, the fortitude. So we shall see whether that proves right or wrong. The risk is still there, but I think it's interesting to see how markets are trying to interpret this.